consensus is the ECB is going to ease. A lot of the people we've been speaking to say not enough. What do you expect?
We expect a package of measures which consists of the following. 10 to 15 basis points off both the refi and the deposit rate, and probably a 6 to 12 month LTRO to add liquidity in the short term. Additionally, the ECB is likely to give a green light to a targeted LTRO of 2 to 4 years, which would be potentially announced at the June meeting, but not actually implemented until November after the stress tests.
Sure.
It's a question of whether that's enough for the markets.
Do you think Draghi's acted too late?
Definitely. I mean, there is an argument that the ECB hasn't stimulated enough. And, if you look at nominal GDP growth in the Eurozone, you look at the decomposition between growth and inflation, there's clear arguments that there's a reflation is needed in Europe. However, where we're at the moment, the bias really is to move modestly rather than have a game changer. And I don't think that the market's going to be sufficiently impressed when it sees the details. It's not going to get a big bazooka.
The Bank of England meeting as well next week, Mike, many sounds coming out recently saying that the bank might tighten sooner rather than later. When do you think Carney's going to tighten?
We actually think it's not going to be until the spring of 2015. And the main reason for that is that the Bank of England's Financial Policy Committee meets in June. And we think that they will undertake tightening, which will have an impact in terms of housing-related lending. And that will take some of the steam out of the London property market, which is a big point of concern at the moment. That should be enough, we think, to allow the bank still some breathing room to decide on rates in early 2015.